This is a Power 98.7 podcast. Now we're talking. Subscribe to Power 98.7 podcasts in iTunes or wherever you get your podcasts. There's more on power987.co.za.
In company news, LSAK Technologies, they released a set of numbers there showing a loss that has narrowed by 42% in the 3 months ending September. And joining us on the line to unpack the company's performance is the CEO for Southern Africa at LSAK, Lincoln Mali. Lincoln, good evening, and thank you so much for your time.
Thank you so much, and thank you for having me.
Wonderful, Lincoln. Let's talk about the decline in the net loss over the period, maybe starting at the top line and how it all trickled down to, I think, quite a steep fall. 42% is quite steep.
Yes, I think that this has been a very good quarter for us, and it is an indication of the path we laid out 2.5 years ago when we started repositioning this company, and it shows resilience in our customers, and we've now been able to narrow that loss as you indicated. We also have a very important event in our business where, in 5 years, this company has been able to get an operating income positive number of 4 million rand from an 80 million rand in the previous year. So this is the growth of this business, because the businesses inside it are starting to show the growth that we expect, and our customers are resilient in difficult times.
What also interesting, I think, would be to find out, Lincoln, about the margin mix between the two divisions, the merchant division as well as the consumer division. Where are you seeing the better margins?
I think the better margins are in our merchant business. We see that as our high growth business, but we've also seen well maintained margins in the consumer business. And what we've seen is that these two businesses are starting to both contribute now positively to the company, with the merchant business being largely dominated by the Connect acquisition that we did a year ago, which has now shown continued growth since the acquisition, and the consumer business that has been turned around from a loss-making business to a positive EBITDA business. 4 quarters in a row of positive growth in the consumer business.
Let's also talk about the balance sheet over this period, Lincoln, and how that's faring. And if you've allocated capital over the period, how was that done?
So if I just look at the balance sheet, the most important thing for us that has, really been encouraging for us is that we've started to reduce our debt levels. We are working very hard to dispose some of our non-core assets and improve our net debt to EBITDA. So that's going well, and our funders are promising us even more cuts on our rates as we're starting to improve the business. We're also happy that the business is generating positive cash flow of about 33 million rand versus an outflow of 131 million rand just a year ago. So all of the indications are for us are very good. We've deployed our capital very, 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 very good. Very good working capital work that's been financing that's been done to the business. So overall, we had our balance sheet is starting to look in the direction that we want, and we're paying down our debt, and that gives us amazing possibilities going forward.
I must get into some of the divisions, and maybe we can start with the consumer division. What has demand for credit been like over this high interest rate environment, and impairments? How is that faring as well?
This has been one of the most resilient parts of our businesses. If I think of our loan book, we've grown our loans by 2% year on year. And we've done that in a very difficult economic environment. So we've had to watch our business very closely to see whether there's any strain, to see whether there's any adverse impact on the quality of the book. But I'm happy to say that up to now, that book has remained very good, with a loan loss ratio of under 6% per annum. So we remain quite cautious and vigilant. But up to now, that book has remained very good, and our customers have been able to weather some of the storms.
I'm also asked about insurance and the demand for that one. Normally when consumers are as cash strapped as we've seen, Lincoln, the first thing they do is kind of cut back on insurance. But of course, the kind of insurance that you offer, I think, is the absolutely necessary, or kind of, some would say all insurance is necessary, but of course, that's all debatable. But, it's really, really necessary. So I'm wondering if people have cut back on that as well.
Again, it shows so much of the resilience of our business that we've grown our insurance business by 34% year on year. And at that time, one of the things that we watch is the collections of your premiums. We found that our collection rates are still at 96%, when the industry average is probably around 60%. We've also looked at lapse rates. The lapse rates in the industry are very high, and our lapse rates are only about 7%. So in these difficulties, our customers have seen the value of those products, and they've stayed with those products. And so that's something that we don't take lightly, and things that we want to continue to improve with our customers.
And moving over to the merchant division, over this period, of course, we've seen business as people of all, big business, small business, all really finding the operating environment different. Load shedding, also wondering if that at all has affected the ability, for instance, for merchants to fully make use of your products.
Yes, I think that we've been able to be cautious on some of the lending in this environment, given the high interest rates and given some of the difficulties that merchants have. But we've largely stayed very close to our customers. But other indicators of this market are that the other core volumes are looking very good in this environment. If I just can give you one or two stats, if I look at our VES business, this is where people are selling airtime, data, betting, all of that, which is the throughput of what's going on. That VES throughput is growing at 58% year on year. And viewed on a quarter basis, it's 12% quarter or 48% annualized. That really shows what is happening in that environment. If I look at card throughput, where you're starting to see people using their cards in spaza shops and small businesses in the townships, that card throughput is growing by 56% year on year, or about 6% quarter on quarter, which is about 24% annualized. So there is a lot of activity in these difficult times for the things that really matter to the clients. And I think for us, being positioned to those things that really matter. So if we are with shops that sell the most basic necessities, the things that people use on a day-to-day basis, we see a lot of that activity, which hopefully we can say more about at the informal economy index launch tomorrow.
Very, very fascinating stuff, Lincoln. Before I let you go, let's talk about the strategic focus looking ahead, and also just Lesaka really looking at this macroeconomic environment. Are there any green shoots that you're anticipating for South Africa or for the region, Southern Africa?
So I think for us, we're still focused on growth. We've reaffirmed our revenue guidance to the market, and our EBITDA guidance for the full year just shows the confidence that we have in the fundamentals of the business, the confidence that we have in the resilience of our customers. So that's the first thing. The second thing is that in a business like ours that is around that's growing, we also are looking at inorganic growth. We are looking out there at what the opportunities are in a difficult environment like this, and there are some targets that we are looking at, and so we will also be looking at that as part of our growth to be able to grow through some inorganic means. And the third thing is we think that the informal market is going to be a growth point for a lot of people who see other alternatives as there are difficulties possibly in the formal economic environment. So we're quite confident that we'll be able to maintain the growth that we've got and continue to have a cash-generating, profitable business in the months ahead.
Well, I'd like to thank you for your time this evening, Lincoln. It's been a pleasure hearing all about Lesaka, and congratulations on this very resilient performance.
Thank you so much, Gugleta. Thank you for the support. Thanks for having us.
Wonderful. Go well. That's Lincoln Mali, CEO at Lesaka, Southern Africa, speaking to us about the company's latest set of numbers there. Really, really speaking to a resilient company that has been at a growth phase. And I think interesting about Lesaka, they're also listed on the NASDAQ in the United States, along with companies like Meta and Google or Alphabet, these really big tech companies, because they see themselves as a tech company. And of course, that is the place to be, because investors they also understand what it means for a company to be loss-making. Like he said here, they're not reporting profits yet, they're reporting reductions in losses, and that kind of market kind of behavior is very much more acceptable in the United States on the NASDAQ, where tech companies are often on a growth trajectory and waiting to turn a corner.
You've been listening to a Power 98.7 podcast. For more podcasts, visit power987.co.za or subscribe wherever you get your podcasts.